All right. Hello, everyone. Thank you for coming to this month's market update webinar for April 2024. We'll start with disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. All investments involve risk and, unless otherwise stated, are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing anything discussed within the presentation. And of course, past performance is not a guarantee of future results. You can see our website for additional disclosures. And throughout the webinar, you can fill out our Q&A button with your questions, and I'll address them at the end. Quick bio. My name is Jeremy Eppley. I'm a certified financial planner, accredited investment fiduciary, accredited portfolio management advisor, chartered retirement planning counselor, and I have a master's degree in personal financial planning. Silverstone Financial, the firm, is a fee-only fiduciary registered investment advisory firm. We provide comprehensive wealth management services, including financial planning, investment management, tax prep, estate planning, those sort of things. You can learn more about us on our website. So let's hop into it. Some of the notable events that happened last month. It wasn't that eventful of a month, unless you're one of us that lives in Maryland, and our bridge in Baltimore got run over. Other than that, the financial world was not particularly interesting, which again is not necessarily a bad thing. I've said that a number of times throughout the months and months of doing this. Every so often, there's a less eventful month, and a lot of times, like this month, the market does quite well. So the first thing that happened that was pretty notable was Reddit finally went public, had their IPO, and it shot up quite a bit the first few days of trading. This was highly anticipated. They, I believe, had tried to go public during the pandemic, maybe even before the pandemic, but it never came to fruition. There were a lot of problems simply with how the market was acting. It didn't make IPOs very attractive. Usually, you want to start off your public market debut on a good foot, and a lot of companies have decided to put that off. And Reddit has finally come public, and it's a very large company. It made a big splash and definitely garnered a lot of news headlines. It was great to see. It was interesting to watch. Now, the probably most impactful or interesting thing that happened this month, other than the Francis Scott Key Bridge collapse, was that Sam Bankman-Fried was sentenced to 25 years for his crimes involving FTX. We've talked about it plenty in past webinars. I won't say too much more about Sam Bankman-Fried, other than some people thought that 25 years was too little, because it was arguably the largest financial fraud in history, just with the amount of money that was lost. And others argue that 25 years is too harsh, especially since he didn't seem to have a negative intent with his actions. It just seemed to lead to fraud occurring, at least depending on how much you believe from Sam Bankman-Fried. But he'll be in jail for quite a bit of time. That's what happens, I suppose, when there's broad and extensive fraud in the billions of dollars. One that just happened today, an event that happened today, was that there's a proxy fight. I won't get too much into it because I think most of the clients of the firm don't care too much about a single company, but it took up a lot of news headlines in the financial world. So Nelson Peltz, he's, I believe, a hedge fund manager, some sort of money manager, and he was trying to convince Disney to change some of its corporate practices to make the company more profitable. So this is what you call an activist investor. And he was trying to rally different other money managers that held Disney shares to vote in his direction to, I believe, change maybe some board seats and change some corporate practices. On the other side is Bob Iger, the CEO of Disney, who didn't want to make the changes that Nelson Peltz was arguing for. Ultimately, today, it finally came down, and Disney beat the activist investor, Nelson Peltz. So Nelson lost his proxy vote battle. And I don't have a strong opinion either way. Disney has had lots of problems, also lots of successes throughout the years. I think especially the pandemic was problematic with the switching of CEOs and then switching back to the original CEO. And there's definitely been problems, but I don't know if what Nelson Peltz, again, I'm not going to cover it too much, but what he was suggesting, I don't know if that would have solved very much. But in the after hours after the vote was finalized, I think Disney's down 3% for the day. So as a market, the market saw that as bad news. It depends on your individual opinion of the company and what Nelson Peltz was suggesting. I'll skip real quick to the hot inflation read. One of the reasons that there's some fear in the market still is inflation isn't coming down as fast as one would hope. Inflation came in at 3.1% year over year, but we expected 2.9%, so a little bit hot. And for month over month, so how much prices increased from February to March was 0.3%, and the market expected 0.2%. So inflation has been hot for the past few months. I believe January, February, March all were hot. So they're having some problems with getting inflation back down to their 2% target, the Federal Reserve. But at the same time, the economy is strong, and the Federal Reserve doesn't need to lower interest rates anytime soon. So hopefully, ideally, we'll continue having a soft landing and having the inflation slowly come down. But we'll see. It's a risk that, as a money manager, as a financial advisor, I follow pretty closely. But as for those of you that are clients, not something to worry about too much. Hopefully, it'll continue to solve itself. So the Francis Scott Key Bridge, definitely the most interesting thing that happened this month, especially for us Marylanders. The Port of Baltimore was the 9th largest U.S. port in terms of overall trade volume. So it being completely blocked off is a significant problem. Also, I believe I had seen a couple headlines about there are 2, maybe 3 important U.S. carriers or U.S. Parts of the U.S. fleet, naval fleet, that are trapped inside the Port of Baltimore. So if, say, we got dragged into a war with Taiwan, which experienced a large earthquake, not necessarily that's going to start a war or anything, but if the Chinese decided to be provocative this month or the coming probably year, since the bridge collapse is going to be a problem for quite a bit of time, some of our fleet is trapped inside. So it's very interesting to see. It's definitely not a good event, and it's definitely going to continue to cause problems. Probably, I had seen estimates of 2 years before the bridge is gone and a new bridge is built at the earliest. Most likely, the number one goal is to get the scraps, the bridge that is blocking the waterways out, so the ships can move, and then it's to rebuild a new one, which will probably take longer. So it's kind of crazy, again, as a Marylander, to see it all happen. Well, we'll see if there's any material impact for the broader markets. I don't expect it too much. Maybe some higher costs for sea shipping on the East Coast, but it's hard to predict uh, how one bridge could affect multiple companies. We'll have to see. Federal Reserve, they met in March. They had zero interest rate change from month to month. We're still expecting 0 to 25 basis points for the foreseeable future, either no change or a drop of 25 basis points to be specific. It probably will continue to be no change for a while, especially with inflation staying hot. The original market consensus was 3 rate cuts by the end of the year, but if inflation doesn't come down, it might become 2 or 1 or no rate cuts this year. So I'll keep you informed as more meetings occur. But I think the next one's in May, so we might not have one for a little bit. March was quite a good month. The S&P 500 was up 3%. It's a solid month. Mega caps doing slightly worse than the broader S&P or the small caps. It's nothing wrong with the mega caps here. A lot of it comes down to they just ran up so much in the past months prior that everything else is catching up essentially. Tesla and Apple were down. Tesla just struggling with some of their earnings, and Apple being dragged into more antitrust suits. So that's definitely drawing on those mega cap names. ex-US, so non-US stocks, up 2.6%. Pretty interesting to see it performing so well, though it's still lagging the S&P 500, the US markets. So it doesn't really change my investment viewpoint that most ex-US, non-US equities aren't as attractive, with some exceptions. Interesting to see. Interesting to see that it is keeping up at least this month, but in the past months it haven't. U.S. bonds, I think it's the largest number we've seen for a month-over-month change in total value. We've had some really terrible bond performances, and that has to do with rising rates, lowering rates. There's been a lot of interest rate fluctuation since the pandemic, and that isn't always great for bonds. Gold up almost 9%, oil up 6%, Bitcoin 12.5%. For those commodities, if you're considering Bitcoin a commodity, quite a strong month across the board. Year to date, similar. Everything is up year to date except for the bonds. Bitcoin being the large number there, being up 65, 66% in the past 3 months. S&P 500 up 10% for the past 3 months. So really impressive performance. Not too much more to say since there's only been 3 months of data so far for the year. But we've had a really good run, which this next chart will show. This is the S&P 500 chart for the past year or so. And you can see since November, we've had such a good run up in the markets that it's starting to make me wonder how much farther can it go before it takes a pause and slows down. It actually, you can see a pretty good connection here where this is almost straight up, and then it took a month off, 2 months off, 3 months off. I don't know if it's going to continue that sort of pattern. Maybe it'll just be half a month or a month or a month and a half of trading flat or giving up some of the returns that we've seen. But we're getting quite high on the S&P 500, and valuations are getting a little bit tighter, a little bit stretched. So we'll see. My expectation, both the past February, March were up slightly with not too much confidence that it was going to continue to go up. Now I'm down slightly. I think more likely than not, maybe 60% chance of, it's definitely not a guarantee or anything, but I would say it might start going down a little bit. But whenever I say these calls, you shouldn't try to time the market. Staying in long term is shown in plenty of academic papers to be the best way to build wealth long term. is not worry too much about the fluctuations. I bring it up in these webinars so that people understand what's happening. And if there's drawdowns in the markets and you see the headlines, not to be afraid. It's natural, and to remember the context that we're up significantly. 4,600. These are all-time highs. We never actually been this high before. So it's understandable and natural if the market pulls back a little bit. And we've had a great market so far, so we shouldn't complain too much. So I kind of flew through everything in 16 minutes. This is the last slide here, talking about the average monthly S&P 500 index returns. The only reason I would say the rally might continue is because historically April is quite a good month. It's one of the best. But we've had green all the way through, and February was an abnormally strong month. March was 3 times the normal amount. So, or the average amount rather. So we might see some of these trends reverse a little bit. We might have a tighter April, but I could be wrong. We could see continued growth. And then I'll probably reiterate the same thing in May, saying, well, if we had a strong April, then May and June, we might give up some of those returns. But we'll see. I'll keep everyone up to date as it comes. So, really short webinar this month. Again, not too much happened. I flew through the numbers. I'm not going to keep you guys too long if there isn't too much to talk about. The goal of these webinars is to touch base, to keep everyone informed of what is driving the markets and some of the important news items. And since this month there wasn't as many things happening, I won't take you away from your dinners or however you like to spend your nights. We pulled in a couple questions about the bridge throughout the webinar. I think I covered it pretty well. The main question that I had read was about the impact long term. Yeah, about what I said. The bridge being down is terrible for all the different supply chains that rely on the Port of Baltimore. It being the 9th largest port in the U.S., I don't know how it stacks up to East Coast versus West Coast ports. I would guess it's probably top 5 East Coast ports. It's going to definitely have some diversion away from the Port of Baltimore, and not being able, I know it's a large car port. I believe there's some oil, gas, coal that goes through these ports. It definitely might cause prices to go up, especially in the region, even if not the entire country. It's hard to say how impactful a port closure is. It's honestly going to be interesting to see, because I don't know if we've ever seen such an event take place. I'm trying to think, and I might be ignorant of another similar event, but this seems very unique, having a bridge block an entire port. The bay is large, and having it completely blocked off. I guess you could think of a blockade might have a similar effect. I believe there was a Russian blockade of some of the Crimean ports for Ukraine's grain, and that caused food prices to go up worldwide, since they are the breadbasket, or a large producer of these, the breadbasket of the world, large producer of these food items. We might see a similar thing with the Port of Baltimore, with some of the automotive, some of the fossil fuels that go through the ports. So I guess it depends on what you're trying to buy and how close you are to the port, and how quickly these logistics companies are able to divert these shipments to other ports, and if they're able to ramp up production. I think the better question, other than how long until the port of Baltimore is open again, I think the other question is, well, I think Savannah has a large port in Georgia, and some ports in New York and those areas. How much excess capacity do they have? Were they already at 100% and diverting excess cargo to those ports is just going to wait out in the water because they don't have any room? Or were they at 80%? They could absorb a lot of the port activity from Baltimore. We're gonna have to see. Honestly, I'm not an expert, but it's definitely historic to see um, this such a large event, such a catastrophic, sad event. Honestly. All right, those are the only questions that I had seen about the bridge. So again, thank you so much for attending. 21 minutes. I think it might be one of the shortest webinars we've done. But I hope to see you back next month with some more news and hopefully better news. No bridges collapsing and additional up markets. Hopefully I'm wrong and the market will keep going up. So yeah, you're welcome. I guess I saw a couple messages for thank you and good night. All right, have a great night, everyone.